Welcome to Daily Conversation. This is Mr. K.
This is Eric.
Yeah, today is the 30th of March 2021 and the time now is 6:17 a.m. Well, today our topic is sharing of your cognition about investment and also your experience about investment. So before we get started, please click the like button and subscribe to our YouTube channel. Alright, so here we go. Yeah, right. So today we talk about investment. And to me investment is something um still new to me. And I have just started uh uh last month. And then um before this I think investment is something risky. And uh um but now I think investment is something uh, uh, we can use it to make money using our money. And then um, to talk about the first part of the question, which is the cognition of investment. So I think the prices of most of the big stocks are increasing over the year. So instead of staying out of the market all the time, so uh, I decided to use a portion of my savings to invest. Um, so to earn so-called passive income. Yep. And then of course we know there are inflations everywhere. So investment is something that can go along with inflation. Yeah, because we buy the stock and the price goes up uh, together with the inflation. So so I think it is something that we really should consider if uh, we have savings. Yeah, and then for experience about investment, and actually I'm really uh, new on this. And uh, actually I don't know much about investment, but I think it is not something that uh, I have to wait until I fully understand what it is. So so now actually I am uh, trying to buy some uh, big stocks, which is um, like using the how to say um, uh, to make use of the market decision. Yeah, because they are big stocks. So actually I also didn't look at much of their, let's say, financial reports to analyze or to compare. I just simply choose some of the biggest and then to invest. Yeah, so this is what I am doing right now. Yeah, Eric.
Mm. Yeah, so that's all for sharing.
Yeah, yeah.
Okay. Mm. Uh, when 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 we talk when I talk about the condition about investment,
Mm.
one question will raise in my mind. Yeah.
Okay.
Uh, when is the first these terms investment across in my mind? Yeah. So
Mm.
when is the first? So to me, it's actually quite young. Yeah. Investment close to my mind when I was still young is about 14 or 15 years old. Yeah.
Wow.
And about that time, the investment I can think of is about the property investment. Yeah,
Mm.
some people uh, earn some employee incomes so that they buy house. Then
Yeah.
why they buy house is not it's not for live only. They
Mm.
also they also expect the returns from the appreciate of the house.
Mm.
Yeah. And this is the first time I came across this idea, yeah, investment. And then after 1 or 2 years, and because I was studying uh we so called the business subject, yeah, a
Mm.
business type subject. So it's not the or we should say the commons, yeah, uh commons, yeah, common
Mm.
subject.
Yeah.
So it's not the science type subject. Yeah.
Mm.
So science type subject is something like the biology and chemistry, physics, yeah, in our
Mm.
secondary school. So
Yeah.
I was taking the accounting, yeah, and some of the science, yeah, general science and additional mathematics. Yeah.
Mm.
And in one of the topic of accounting that I studying in secondary school, one topic is talk about the stock. Yeah,
Mm.
it's a very basic one. So if, for example, like how to calculate the stock price. So
Yeah.
use the market cap divided by the number of share, yeah, something like this, and also
Yeah.
learn some of the ratio, for example, current ratio and quick ratio, and some other like a return on capital employed, yeah, ROCE, ROE, yeah, all that.
Mm.
Or return on revenue or PE ratio, yeah, all that ratio. So uh, that top that topic is teach us about this only. Mm.
Mm.
And then because I attend the tuition class and my tuition tutor ask us, yeah, who who are going to buy stock, yeah, in futures. Yeah,
Mm.
they ask us about this question, and
Yeah.
no one uh answer her. Yeah,
Oh.
I answer her. Yeah, hmm? What?
Yeah. What age are you at that time?
Oh, it's about 17.
Oh, okay. Yeah.
Yeah, and yeah, yeah. No, I think at that time I'm 16. Yeah, 16.
Oh,
Mm.
okay.
Yeah, so I answer uh my tuition teacher. Yeah, I said,
Mm.
yeah, I will. So, and
Mm.
then she said, whoa, wow, yeah, good luck. Yeah, because in my knowledge, buying stock will make you bankruptcy. Yeah, it's very high risk. Yeah, hopefully, you won't get into trouble. Mm.
Oh. Mm.
Yeah. So at that time, I have an expectation. Yeah. Buying stock can make you bankruptcy. This is
Yeah.
the first idea about stock investment. And then
Mm.
after 1 year after I graduate from secondary school, mm, I also try to learn some investment concept, some investment idea, and also some investment strategy. And then I also like to buy the book which relate to the investment.
Mm.
Mm. And then and why? Yeah, it's also because of the accounting subject. Yeah, principal accounting in A level. We also learn some of the concept about the stock, about the shares. Yeah.
Mm.
So yeah, it it raised my interest. And
Yeah.
I decided to learn the stock investment by my own. Yeah.
Mm.
And then I try to search some information from online. Yeah. And then I try to learn some concept. Yeah, like the PE, and also like uh how to value a stock.
Mm.
Mm. And what type of stock. For example, we have like the uh s- uh uh cyc cyclical, yeah,
Oh.
cyclical stock. So is for example like the property industry is a cyclical stock.
Oh, I
So
see.
yeah, so in in some years they will have a great performance, but and also after that period, uh it will have a great uh recession. Yeah.
Oh, yeah.
So this is the cyclical stock. Mm.
Mm.
Yeah, and we also have like the value stock. We also have like the growth stock. We have like the technology stock.
Mm.
And when I first knew the stock investment, I buy the book and I read. Yeah, and of course, in this investment uh field, we um who we know, yeah, who is a famous person at that time is Warren Buffett. Mm,
Mm.
yeah, so I buy those books which talk about how Warren Buffett do investment,
Yeah.
and and I and I learned that Warren Buffett don't invest in technology stock. Yeah, because they don't know. Mm, so I follow. I also don't invest in technology stock. Yeah,
Mm.
and this is the worst idea.
Yeah.
Mm, yeah, and after some time, and it's about after 6 months. So is this is when uh this is the second half year of A level. Mm, yeah, in my college life. So
Mm.
at that time, two of my friends also have interest to do investment because they heard one of friend have earned 200K from stock investment. But
Wow.
now I think this is he just cheating us. Yeah, I think I think uh yeah he just mm, yeah he just cheated. Mm,
Mm.
because
Boasting.
it's impossible. And that person say he start to do investment since like 14 or 13 years old using her uncle account. And then he also have he also has his teacher, yeah, teach him how to do investment, and with him about 5 years.
Mm.
Yeah, you see, 13 years old or 14 years old to like 18 or 19.
Yeah.
Yeah, so from 1,000 grow to 200K in 5 years. Yeah, 5 to 6 years. This is impossible
Yeah.
in Malaysia market. Yeah, in Malaysia stock market, this is totally impossible. Mm,
Mm.
yeah. So, but at that time we don't know. We just think, wow, if we can start to do stock investment, if we can learn and do the stock investment, we also can be like that.
Mm. Yeah.
Yeah. So that I search some information, and at that time, uh there is one blocker I uh I keep following. Yeah.
Mm.
And then the the uh the writer of the blog, mm, selling the book, selling his book, and then I buy. Yeah, I buy them. I ask two of my friend also. Yeah, we can share. We can share the cost, and then we can buy two book.
Yeah.
Then we can read.
Mm.
So but in my knowledge now, I think I'm the person who who really spend time to read two of the book. Yeah, because after we get the book, we have
Mm.
two book. Yeah, two
Yeah.
books is hard copy, and I read the soft copy, and I give one of my friend uh one of the book. Yeah, and another friend take another book. So this
Mm.
they take the hard copy.
Yeah.
And then I read the soft copy. Yeah. So of course I got send them the soft copy uh book bound. Yeah.
Mm.
But I don't think they really spend time to read.
Mm.
And at
Yeah.
that time, after I read the book, and then also I try to figure out how to open a stock, a Malaysia stock account. Yeah,
Mm.
stock trading account. Mm. So it is so uh when I first opened the stock trading account is yeah is uh is is after 6 months. Yeah, is the time I first uh, at, I first learn not I first learn I means uh uh I first really put my really pay my attention to analyze the stock. Yeah, 6 months after
Mm.
that. Mm. So it's about like 3 or 4 months, 3 to 4 months after I buy those books. Mm.
Mm.
So at that time uh I was studying in college. Yeah,
Yeah.
is the university. Yeah, it's
Mm.
a degree. So the first half year I spent time to study and really hard. And I study a lot of things.
Yeah.
Yeah, and I learned what is the I learned uh a lot of model to value the stock. For example, the dividend discount model. Yeah, and we only learn this. We only learn this in I think it's in third year of our college life.
Mm.
Yeah, the subject is called corporate finance. But to me, this is the thing.
Not a new thing.
Yeah, no, not only not new thing.
Mm.
This dividend discount model is too simple to me. Yeah, because I learned this in 2 years ago.
Mm.
And then I also learned another model which is called the free cash flow discount model.
Mm.
Okay, the first I came across the dividend discount model, but what is the biggest disadvantage of using this model? Because not every company paying the dividend, right?
Mm. Yeah.
Yeah. So you can't really use this model to do the analysis because, for example, you want to compare two stocks in the same industry. You want to find out which stock have higher value, but you
Mm.
can't compare because one of the stock pay dividend, another didn't. So how can you compare? You can't.
Mm.
Mm.
Yeah.
So dividend discount model is just a dump. Yeah.
Mm.
So I switched to the free cash flow discount model.
Okay.
Yeah. Yeah. And this free cash flow discount model and this free cash flow, okay, normally we'll define which is the if you look at the cash flow statement
Mm.
or statement of cash flow, you will get three most important items, which is the cash from the operating activities. Second is the cash from the investing activities. The third is the cash from the financing activities. Yeah. So free cash flow is concern the operating activities and the investing activities. So what is the free cash flow? It's a cash. It's a total. There is a net total or net of the cash from operating activities and cash from the investing activities. Yeah. And normally, cash from operating activities will be positive. Yeah, normally, but for bad company, it is a negative amount. Yeah, and cash from investing activities normally is negative because when the company want to expand their business, they buy machine or they buy property, mm, and then all the capital costs incurred will was shown in this part, cash from the investing activity. So normally it's minus because
Yeah.
they need to spend the money. Mm, yeah. So it's quite funny. At that time, I find the model and how do I do the calculation? And I use Excel. And actually, the Excel model is downloaded from internet. Yeah. Mm. So I try to set some very easy formula,
Yeah.
okay, and I also try to use other people's formula. Yeah, because there are some formula uh sorry there are some if formula that written by uh the producer of the Excel template. But I don't know how to write the formula, so I just use the formula.
Yeah.
Yeah, I I just know how to use. Okay, and then I design the model uh to to use the 10 years free cash flow. So it's a historical 10 years free cash flow. Mm. So so I get the data, I get the annual report. Yeah, I get the amount from the annual report. Yeah, which we can very easily to find from internet.
Yeah.
And then I put in the figure, so the model will help me to calculate the amount. Yeah, but what is the problem of this model? Yeah, actually have a big problem. Yeah, the first uh because you try to use historical data to calculate uh the stock value. Yeah. So uh it may inaccurate. Yeah, because the historical data may not reflect the future's uh performance. Yeah, and normally what stock you would choose? You would choose the cyclical stock. Yeah, because this uh for example, you compare two stock or you compare 10 stock.
Yeah.
And few of them have the highest performance. Who are them? Is a cyclical stock. It's a cyclical stock. Yeah, because the cyclical stock have the great performance. Yeah, have the growth. Yeah, have the high growth rate. Mm. For example, the first 5 years, the growth rate is low. Okay, and the amount and the free cash flow amount is low. Yeah, but at the near 5 years, the free cash flow amount is high. And also the growth rate is high.
Yeah.
Yeah. So you try to use the growth rate. For example, the growth rate is like 8% or 10%. You try to use the growth rate to predict they will also have the same growth rate in the futures. And also, just like I told you, I don't invest in technology stock. Yeah. So for traditional industry, they will only have cyclical stock will have this high growth rate, 8% or 10% or 15%. Yeah. And those stock is a cyclical stock. So that's mean in the near 5 years, yeah, at the latest 5 years have the highest performance, but it is at the peak already. So in the following 5 years, probably the recession for this type of stock is coming.
Oh.
Yeah, you just buy the stock at the peak. Yeah, yeah. So it's normally like this. Yeah. So this is the first problem. And the second problem. Yeah. And the second problem. Uh. Yeah. You ignore those company which have negative free cash flow. Or little free cash flow. Yeah. Because you see. So if you use the free cash flow discount model, the cash from operating activities must greater than cash from investing activities. Otherwise, the amount will turn into negative. And if negative, it will be a negative growth rate, right?
Yeah.
Yeah, so it is not a good indicator. Yeah, because for example, like Facebook, Amazon, or Apple, or Tesla. This high growth rate stock, or we say the Shopify, yeah, and any stock which you can which you can think of, which consider high growth rate stock, okay? And all of them has one similarity, yeah, which is the first few years they are suffering loss, and also they need to spend a lot of money to do investment to expand their business in order to gain the network effect or gain the economy of scale. Yeah. So now if you try to use the free cash flow, because the cash from investing activities is so huge, so if you try to use the free cash flow discount model to analyze stock, you will fall into a trap that you ignore all this type of stock.
Yep.
Yeah. So yeah, in conclusion, at the end you only select the cyclical stock. Yeah, because uh this is the cycle. Yeah, this is the booming cycle, and they can earn a lot of money, and they don't need to invest a lot, but they still can earn a lot of money because they are in a booming cycle. When they are turns to the recession cycle, how much investment they spend in is worthless. Yeah.
Yeah.
So this is the second problem with this model, and the third problem with this model is actually the discount rate. How do you define the discount rate? Yeah, because free cash flow discount model, you try to find the free cash flow. Yeah. The predicted free cash flow, or the free cash flow forecast, and then you try to discount that back to the net present value.
Yeah.
And we learn this in corporate finance. Yeah, this is a very simple idea. So how do you get the discount rate? Yeah, discount rate could be subjective. And this discount rate is hugely uh, affect affect your result. So affect the intrinsic value of the stock. Yeah. So for example, you use 6%. Yeah, you use 6%. It shows that you can buy the stock. But if you use like the discount rate is like 8%, so now turns into you can't buy the stock. Yeah, because now the market price is higher than the intrinsic value. So this is quite uh it is quite difficult to determine the real discount rate. Of course, you can use other method. For example, you use the WCC. Yeah, what is WCC? The weighted average cost of capital. Yeah, it's actually this WCC is actually using the cost of equity plus the cost of debt. Yeah, so it's something like what is the cost of this company raise the funds to do investment. Yeah, so they use the WCC. Yeah, so that's mean, for example, you want to your company want to expand, how much you need to borrow money. Yeah, either through the bank loan, through the debenture, through the debt, or
Yeah.
either you issue the shares. Yeah, you do the right issue. So this is the cost, cost of the capital, which is also called WACC. Yeah.
Okay.
But if you use this as the discount rate, it also have some problem. Because the WACC is not fixed. For example, this time you can get the 2% bank loan, but next time you can only get 4%. Yeah.
Yep.
Yeah. Or because in the past your share price is low. Yeah. So your cost of equity, is low. But now if you want to do right issue, your cost of equity will be high. Yeah, so it is not fixed. Yeah, so you just use the current discount rate or current WACC to find the net present value, which is the futures value. Yeah, future value of the stock. Yeah, so it is not consistent. Yeah. Yeah, so this is not a good method actually. Yeah, but now there are still many experts try to use the free cash try to use the cash flow model. Yeah,
Oh.
normally they just use, yeah, some expert they use the free cash flow. Some analyzer they just use the cash from operating activities. Yeah, but what's the difference? They will try to acquire as more data as they can, and try to project the future's free cash flow by taking the future's data, by taking the current data. For example, if let's say like Tesla, what is the maximum capacity of Tesla? Yeah, how many car Tesla can produce in a year? For example, uh uh let's say like 5 million, or 10 million.
Yeah.
Yeah, and in 5 years, how in these 5 years, in the next 5 years, uh how much maximum capacity can Tesla increase? So that means how many car Tesla can sell. Yeah, how many car Tesla can sell in the next 5 years. Yeah, so is this growing? Yeah, is the growth is high? Yeah, they try to use this kind of information, yeah, to project the future's cash flow. And then
Yeah.
they use the cash flow to discount to the net present value. Yeah, this is a better method. Yeah, because uh for my method, I just use the historical data. And I just use the number. I didn't take into consideration mm, of the data. I didn't study the industry. Yeah, I didn't study the company really hard, to understand the company business, and also uh, their income structure. Yeah, all these things, and also their cost structure. All these things. Mm. Yeah. So uh, I lose quite a lot of money from this free cash flow discount method. Yeah, I lose like more than 30%. Yeah. So it is about 1 year. Yeah. And before this period, I just used
Mm.
the PE ratio valuation. It also have some problem. Yeah. Yeah. So until until here, yeah,
Yeah.
I I have about like 1, 2, 3, about 3 years, 3 year experience in investing. Yeah, about 3 years. Yeah,
Mm.
including including the beginning, including the learning stage at the beginning. Yeah, it's about 3 years. Mm.
Yeah.
And then yeah, but you can imagine, yeah, with 3 years experience, you still can't earn money. Yeah. Mm. So at that time, I really feel hopeless. And I want to quit. Mm.
Mm.
Yeah. Uh, but I but, uh, but I tell myself, yeah, I tell myself, yeah, give myself one more chance. Mm. And then I reread the book. Yeah, actually, the book is called this is a Chinese book. The book called 冲刺白马股.
Oh,
Mm.
okay.
Mm. And actually, I read this book before, yeah, before the period that I feel hopeless. Yeah. And the book is actually a free book, which comes together with the purchase of Kindle, the ebook reader. Yeah.
Oh. Mm-mm.
Mm. And the first time I read the book, and I read the whole book, but I didn't pay attention. Yeah, I didn't try the method that they mentioned. Yeah. And and yeah, after the experience of losing that money, yeah,
Mm.
this is about 30%. Yeah, this is about 30% of my investment fund.
Mm.
Mm. And then I reread the book. I pick up the book and I read. Mm. And then I try to apply the methods. Yeah, I just follow the methods. Yeah. So the methods actually suggest you to find the high growth rate stock. Yeah, for example, the revenue growth rate is more
Mm.
than like 50% or 100%. Yeah,
Yeah.
and the net profit growth rate is more than 50%. Yeah, in the last uh 2 or 3 years, and also in the last like 2 or 3 quarter. Mm,
Okay.
yeah, and he also suggests you not to invest those low value stock. Yeah. For example, you like to invest the stock like uh a few ringgit. Mm.
Mm.
but you kind of ignore the stock price, the stock which have the high stock price. For example, uh, more than 10 ringgit or something like that. That is subjective. Mm.
Mm.
And uh, what the author trying to say? Yeah, the author is actually trying to say uh low value stock uh uh the reason why low value stock is low value because it is low value.
Mm.
Yeah. So sorry, I miss the low price stock. Why the low price stock is selling at a low price? Because they are low value. Yeah, they are low value stock. Yeah.
Mm.
Yeah. So actually I know this idea before. I know uh we have like the blue chip stock. And why I don't invest the blue chip stock in the past? Mm. Yeah, because I know the return, the rate of return of the blue chip stock is really low. Mm. Yeah, so I kind to find the next the next blue chip stock.
Mm.
So
Yeah.
end up losing a lot of money. So and the book even suggests you try to even suggest you to buy the stock which hit the all-time high. It's all-time high. So if the stock uh not even hit the all-time high, uh the method suggests you ignore the stock.
Oh.
Ignore the stock even they have the high growth rate. Yeah. So this is a mind-blowing idea actually. Normally we think we want to buy the stock at a very low price. So we try to wait the stock
Mm.
drop to the bottom and then we buy. Mm,
Yeah.
yeah. But actually we kind of ignore why the stock at the bottom.
Mm.
You just think you just think you are smart. But you think other people are stupid. Mm, yeah. But the reality may not be like this. Maybe uh the person who uh who are the fool is you. Yeah.
Mm.
So the expert don't want to buy at this button got some reason, but you just don't know the reason. They
Mm.
can get
Yeah.
the information, you cannot get the information. Yeah. So this is a mind blowing idea, and and this is also the idea that uh totally totally opposite of my previous investment strategy. Yeah, because I just think I want to buy the stock at the low price and then we can sell at the high price. But this
Mm.
method suggests you to buy stock at a high price and then you can sell at a higher price.
Mm.
Mm.
Yeah.
So this is also the reason why I didn't try this method before I feel hopeless. Before the period I feel hopeless. So at that time I try to follow the method and then I recover some losses. Yeah. Actually I recover most of the losses. That I lose in the past.
Mm.
And that is the first time. And that is the first time uh I gain from from a single stock. From a single stock about 50%. So I
Mm.
remember the stock uh the name of the company is called Heng Yuan. This is a this is a company in the oil industry, oil extraction industry. Mm.
Oh.
And I buy at a high price.
Mm.
At really at a all time high, but it keep rising. Mm. Within few months, within like 2 or 3 months. Yeah, and and actually I forget already. I forget the returns is 100% or 50%.
Mm. Yeah.
It's between 50% to 100%.
Wow. Mm.
Yeah. So I recover most of the losses at that time.
Yeah.
Mm. And then after that, I try to pay attention to the technical analysis. And in the past, I don't really pay attention to the technical analysis. But after that, I try to learn how to read the chart.
Mm.
Mm. And then I meet one theory which is called 缠论. Mm.
Okay.
Mm. Yeah. And I try and then at that time I already graduate from the college. And I start
Mm.
to work. Mm. And I try to apply the 缠论 okay, to do the stock trading. Yeah.
Yeah.
And then uh uh with using the method, it uh it helped me earn it's nearly 100% of return within a few months, in 4 to 6 months.
Mm. Okay.
And at that time, I trade the call wallet. Yeah, call wallet. Yeah. So we got the stock which is the underlying, yeah, the underlying asset of the wallet. Yeah,
Mm.
or the call wallet. So this is a very high risk. This is something like an option. Mm,
Yeah.
mm. And yeah, then why but eventually I quit the trading. Because this is really really high risk. Mm. Yeah, with that trading, I recover some all the losses from the stock investment. Yeah, plus the money, yeah, the money I spend
Mm.
in the money game. Yeah. So this is about 2,000 ringgit, yeah, in the past. Yeah.
Mm.
So yeah, because I put this into the same mental account. Yeah. All the money game, all the investment
Yeah.
is one mental account. So at this time, I really gain back the confidence. Yeah, that I can profit. Yeah, I can profit from stock investment. Mm,
Mm.
yeah,
Yep.
and then I switched to the eToro platform. Yeah, because in trading with the call wallets is very high risk. But what if I trade the real stock, the underlying asset?
Mm.
Okay, I trade the stock, but with the leverage. Mm. So it will be lower risk. Okay, because there's no time limit, because like the wallets and the call wallets there is a time limit. For example, 3 months or 6 months. After that,
Mm.
your investment will turn to zero. Yeah. But if you invest the stock, let's say if you invest the stock without leverage,
Yeah.
unless the company bankruptcy or delist delisted, so your stock will turn into zero value. Yeah. Uh, but with leverage, for example, like we took leverage, yeah, times two leverage, so the stock need to drop 50%. So your investment, yeah, only this your investment will turn to zero. So
Mm.
at that
Yep.
time, my opinion is uh quote unquote playing the leverage, yeah, is less riskier. It's less riskier than trading the core wallet. So I switched to the eToro platform because
Mm.
this is the only platform that I know can use the leverage.
Yeah.
Mm, yeah. So I continue to try I continue to apply the Chanlun,
Mm.
and then I addicted to the leverage. Mm. And then in that period, yeah, in that period, uh, that that when I first used the eToro platform is about uh uh 3 years ago in 2018. Yeah,
Okay.
2018.
Yeah.
Mm. And at that time I tried to uh use a Chanlun, okay, and then I also do some investment. Mm. I try to find a good company, and then I try to pick the good timing and do the investment.
Yeah.
Mm. Uh, and it's quite ironic. Yeah. Uh, I I lose quite a lot of money. Yeah, from that.
Oh.
And then in that period I also recover some of the loss. Okay. And
Mm.
at the end, yeah, I use a Tor platform for about 2 years, and eventually I choose to quit. Mm. Yeah, I choose to withdraw all the money from the Toro platform. Yeah. And
Oh.
yesterday I do some I check my account. I check my
Mm.
Toro account. The total deposit is 1135 US dollar, and the total
Mm.
withdrawal is 615. Yeah.
Oh.
So
So it means
I
lose
the
money,
net
right?
loss, yeah, the net loss is around 520, yeah, US dollar. Mm. So this is about 50%. Yeah, nearly
Mm.
50%. Yeah,
Yeah.
yeah. So and actually at that time I also have one experience that feel really depressed. Yeah, depressed. Yeah.
Mm.
So this is one speculation. Yeah. I buy I buy a stock that I'm not familiar, and I use a high leverage, and I bet it will rise or it will drop. Yeah.
Mm.
So and yeah, the next day I saw the stock. Yeah. Um, my investment portion uh have been liquidated. Yeah. So it is a few hundred. So suddenly liquidated. So is you can imagine you lose like 50% of your fund.
Yeah.
Yeah. Uh, yeah, it's about 50% of your fund overnight. With leverage. Mm,
Mm.
yeah. So on that day I lose like if I'm not wrong, I lose like about 400, 300 or 400 US dollar in a day. Yeah.
Mm.
Yeah. So after that, uh, I tell myself I have to stop. Yeah, I have to do some reflection before continue to do the investment.
Mm.
Mm.
Yeah.
And then at that time, one of my favorite writer write a book. Yeah, which is called the Regular Investing, written by Li Xiaolai. And I read
Mm.
the book, and I know this person Li Xiaolai uh, has invested into cryptocurrency few years ago. Mm. But
Yeah.
I don't really pay attention to study. I don't really pay time to study the cryptocurrency. Yeah, I just know the cryptocurrency on the surface level. Mm. And then because he write a book, and then I read.
Yeah.
So uh one idea comes into my mind. Yeah, why? Yeah, why he recommends us to invest in cryptocurrency? Yeah, there's a question.
Mm.
Yeah, there's a question which allow me to start my journey of investing in cryptocurrency. So at that time I keep studying,
Yeah.
and then I read the book, and then I change my mindset. Mm, and then I realized it will be a big opportunity. Yeah, but I don't have enough money to do investment. Yeah.
Mm.
So yeah, because of that book, it really let me think. Yeah, let me do a lot of reflection, and this is also a period of struggling. Yeah, I struggle uh a quite long time period is about 6 months. And finally, I came to Singapore to work. Mm, and then it's also the period of COVID-19.
Mm.
Mm,
Yeah.
and then I try to save money, save 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 much money as I can, and then try to do the investment. Yeah,
Mm.
and then as of today, okay, I investing in cryptocurrency since May 2020. Yeah,
Mm.
it's about 1 year. Yeah, so it's 10 months, 10 months or 11 months. It's about 1 year,
Yeah.
and I quit leveraging. Yeah, yeah, because of the prior experience, I know leverage is an evil. Yeah, it's an evil. So we
Mm.
shouldn't touch it. Mm.
Yeah.
So quit the leveraging, and then I use the dollar cost averaging. Yeah, I use
Mm.
the simplest method. Yeah, that I first learned when I start to do the when I start to do the investment in few years ago. Yeah. So
Mm.
in total, I have about, yeah, because I the first investment that I do. with real money is since is at when I was 19 years old. Yeah, so until now is about 5 to 6 years. Yeah,
Yeah.
only 5 years pass, I can start to really earn earn the money. Yeah, earn the money from investment. Yeah. So now yeah, in that period, yeah, I also keep learning the know what and also the know why of the blockchain technology. Yeah, why what's the use of this technology? Yeah. So because the cryptocurrency market is so volatile. Yeah, the Bitcoin
Mm.
price, the Ethereum price is so volatile. If
Yeah.
you don't have enough, if you don't have high enough conviction, yeah, you eventually you'll quit the market. Mm, yeah, yeah.
Mm.
So you can only if you and also if you don't have enough high conviction to this, you will only invest a very less portion of money. For example, like a few hundred or few thousand. Yeah, not few thousand, maybe just few hundred. So it
Mm.
may be like 1% or less than 1% of your portfolio. Yeah, and
Yeah.
if you invest more than that, you can't suffer the volatile. And and because you didn't get enough conviction, you didn't study, them, so you will just quit the market. When you when it drop at the bottom.
Mm.
Mm,
Yeah.
mm. So yeah, as of today, my paper gain is around 20%. Yeah.
Mm.
So I recover all the loss since last year. Yeah, since last year and start to profit.
Mm.
Yeah, and start to profit. Mm. So 5 year pass. Yeah, yeah. 5 year pass. I start to earn money. This is
Mm.
a long. This is a long period. Mm.
Yeah.
And it's quite ironic because I use the simplest method. Yeah, to do the investment. Yeah. So okay, the experience is really important. Yeah. I also suggest you to
Mm.
record the experience and try to do the reflection and also try to record your mind. Try to write down your idea about your investing journey. Yeah.
Mm.
So why this is important?
Yeah.
Because you can do the reflection and you can uh and you can uh you can it can rise. Yeah, it can raise the awareness. Yeah, of not making the same mistake. Yeah, so it's like the signal you. Yeah, it's a signal to you. Yeah.
Mm.
So at the first and also you can think. Yeah, you can think the investment and also some of the critical question in the investment. Yeah. I also experienced that. For example, at the first I used a dividend discount model.
Mm.
Yeah. So I realized, yeah, some company don't pay dividend, and I switched to the free cash flow discount model. And
Yeah.
also, some company have negative cash flow. Mm. And also, if you try to use the free cash flow discount model or this kind of valuation model, okay, and you can't really know, when to buy because the model will tell you what's the intrinsic value, but it won't tell you when is the best timing to buy. Yeah,
Mm.
when to enter the market, when to buy the stock. So this is a problem, and and you may continue your journey to find when to buy the stock. So, and then you also will find some model. Maybe some model and also some technical analysis can show you when to buy. But how about when to sell? Some model didn't tell you, and maybe some model or some indicator, some technical indicator tell you when to sell. But the indicator is not really useful. Yeah, if the indicator is useful, can allow you to earn money, then there will be no poor. There will be no poor people in the world. And this is impossible, and you also cannot fight. Because if one technical indicator can earn money, the creator of that technical indicator will be the richest man in the world. But you didn't see them. You didn't see them become the richest man in the world. So logically, technical indicator not really can help you to earn a lot of money. It must combine with other analysis. And also maybe combined with other analysis, you still can't earn money, because you see, like the JP Morgan or like the Morgan Stanley or like the Goldman Sachs, they have a department. They have a department with a supercomputer, try to clock in all the indicators, all the formula to detect when to buy, when to sell. They still can't become the most valuable companies in the world. And what is the most valuable company in the world? Apple. Now Apple is the most valuable company, about 2 trillion. But does Apple know how to do investment? No, actually Apple don't know how to do investment, because Apple have like more than a few hundred billion cash. Stay in the bank balance sheet. Stay in the balance sheet. They didn't do any investment. So it's quite ironic. The most valuable company don't know how to do investment, and the company which is not the most valuable company try to do the trading, try to do the investment, but they cannot become the most valuable company. And the most valuable company had a few hundred billion stay in the balance sheet. So at the end, you definitely will form your own investment strategy. And also your own investment thesis, your investment theory, your thesis. And then to me, dollar cost averaging is really the best method. The best method for me. And also for most of the people, because most of people earning a fixed income, maybe weekly basis or monthly basis, and you don't really have a lot of money to make a one-time purchase. And that money is relevant to you. So let's say you have like you have a few 100,000, a few 100,000, and you decided to make a one-time purchase, and after that one-time purchase, you left nothing. And if the stock price drop a lot, then your net worth, your investment fund, uh uh will be dropped. The value of the investment fund will be dropped. And you can't stand with that, so you quit the market, and then the paper loss turns to the real loss. To the real loss. So for normal people, I don't suggest you to make a one-time purchase. Even though you have some saving. For example, you have like few hundred K, a few hundred K, but I don't suggest you to do one-time purchase. Yeah. You can split the few hundred K into like 12 portions. And you try to put them uh for example, you decided to invest 100K
Yeah.
into like the stock market. And I don't suggest you to make a one-time purchase for normal people. And what I would suggest you is you split into 12 portions or 6 portions or 24 portions, up to you. And you put each portion every month. So you kind of like diversify your investment fund in different time. Yeah. So if the market drop, you will buy at a cheaper price. If the market rise, of course you will buy at a higher price. But you already earn money, so you should feel happy. Yeah.
It is
And
the concept of dollar cost averaging, right? To get the
yeah.
average price.
Yeah. And then with this method, many problems will be solved. For example, when to buy, when to sell. This problem have been solved. So when the time to buy, when you first get the salary, when the first day you get your monthly salary or weekly salary. So this is the day, this is the time to buy. So when to sell, you can sell at any time. You can sell at any time, as long as you think the profit is enough. Or if you think you want to do a long-term investment for 10 years, for 20 years, for 30 years, you can choose not to sell. So the holding period is forever. So there's no selling point. You just keep buying as long as the company keep growing. If the company stop growing, you just withdraw all the money and invest in other company which you think has the highest growth rate. Or maybe you diversify into few company. Also can. Yeah. So this is my investment journey. So what is the connection? What is the connection? What is my connection about investment? Okay. And to me, investment is a trade. It's a trade between you and your future self. So for example, you now you buy something. You buy something and you hold something. And 10 years later, you can sell the thing you bought 10 years ago. Okay. And then your net worth will increase. So it is something like the trade between you and your future self. And this is also about the delay gratification. 延迟满足. So is you don't spend the money, you don't consume the money now, you invest. You buy something with more valuable in the future than today. And then investment is the compounding of your wealth. So this is the idea about compound interest. So what is the compound interest? You can imagine the compound interest is something like the small snowball. Small snowball at the top, at the hill, become a giant snowball.
Yeah.
A giant snowball at the bottom of hill.
Mm.
Yeah. Yeah. So this is how the compound interest work. Yeah. And Warren Buffett once said, yeah, if you don't find a way that can earn money when you are sleep, when you fall asleep,
Mm.
you will work until you die.
Mm.
Yeah. Yeah. So investment is the simplest way for most of the people to earn the passive income.
Yeah.
Yeah. Okay, so this is my sharing for today.
Mm. Yep. Yeah. Also, I have nothing to add in.
Okay, so that's all for my today conversation. Uh, uh, so that's all for our today conversation. How do you feel? Did you enjoy the conversations? Please tell us what you think of our conversations. And we are not native speakers. If you found any vocab or grammar mistakes that we made, please also comment to let us know, because we want to learn more and improve ourselves. Remember to like and subscribe to us. Thanks for watching. See you tomorrow.
See you tomorrow.